talking about ags today. Not my specialty, be the first to admit it, but with the inflation talk every single day, I think it's important to give some traders some information on products that directly are in the numbers where we talk about inflation. And CME has those products, so we're going to have a fun discussion on ags today. But I will talk about the indexes too, because they're too important right now not to talk about them.
Right, exactly. I think, there's so much going on this week, and you're right. Inflation, what do we talk about? We talk about headline numbers, we talk about core, and core is what? It's headline minus food. Well, food is part of the picture, and that's where the ags come in. So very important to talk about agricultural products, because just like energy, it's going to dictate what prices are going forward as well.
Here's the interesting thing about the ag space is that when we look at that space, we already know that futures is a niche business as it is, right? I mean, we're trying to change that obviously here with what we're doing on Ninja Network and really all the stuff we're all doing in the futures markets. But a lot of people are learning more and more about futures, and it's, like I said, a niche space, like I said. But when you look at ags is really niche, right? It's one of those things where anytime you get involved in futures markets, I always say you want to obviously understand and learn about your products before you go and trade them. And when you're talking about even the S&P, NASDAQ, even 10-year, interest rate products, I mean, they might seem a little complex at first, but once you dig in a little bit, they're not too difficult to understand what they are. We're obviously going to talk about bonds and treasuries a little bit later in the show today as well, because they're also important to talk about on a day like today. But when you get into the ag space, they have different hours, they have different tick increments, they have different tick values, and so there's a lot more expirations. There's a lot that goes involved in this, because this is something that is physically delivered, and this is really where futures were built on, right? If you go back to the exchange, Chicago Mercantile Exchange, when you look at those products at the Chicago Board of Trade, those initial products were all ags. And there was real trade there, and they were directly impacting the price, those products, when they hit the street. And that same goes for today. And so there's a lot more that goes into these products. Today, I want to just give a quick overview. It's so important, traders, to really do your homework on when these news events come out. Find a detailed report of that and really be aware of that. I call it market awareness, because if you don't know when something like this is happening, these markets are very different than what you're going to see in terms of movement within the indexes, right? Within the indexes, it's pretty challenging to get to a limit up or a limit down. I don't even think we've seen one in a couple of years. But with these products, they are true supply and demand. And so if there is a really big supply or demand issue, these can be what we would call lock limit up or lock limit down for days, right? And they could be stuck at a price where I don't know what the longest I've ever seen was, but I've seen them go pretty long. I mean, just look at lumber when we were talking about with COVID, demand for that. And so the way that they're moving and their limits are very different because of their agriculturals, their commodities. And so there's different restrictions on pricing with them in terms of limits, right? Still obviously open markets and they can go as far as they go, but understand that there is that factor in it. They're also short in time that they're open versus the equity indexes, and the overnights are very different. They also have different times that they're open and not, and it's definitely going to be something you're going to see more on an intraday basis, just because the real big players in that space, similar to what you would see like S&P and NASDAQ, where you're going to see a lot of the volume come in because you've got all the stocks open and you've got, the options on the cash and all the different things. It's even more so when you're looking at commodities, because you're going to see a lot of people. I actually still talk with traders that actually are calling orders in to brokers for commodities. And so there's that still broker relationship between a farmer and actually, the broker. And so those orders are being done throughout the day as well. And so you have different things with flows, and it's just a whole really different universe, really. And so I want to show everybody a couple of things. I want to look at the charts. I want to go over a couple of things that I look at when I'm trading commodities, and I do trade them from time to time, but it's not very often, and it's mostly going to be on a swing basis. And I trade them almost like I would trade an option, in a sense where, like, if I buy corn or if I buy soybeans, I typically will look at that as in a much smaller position that I want to carry out over time that I think it could eventually reach. And once again, this is something that I'll do fundamental homework on as well. So when you look at the charts, I just threw up some TIG values so you understand them. ZC corn. There's also some mini sized futures for these products as well. Soybeans, this is a big product. You can see all the different symbols, and I'll actually give this something for you to download, or you can go to cmegroup.com NinjaTrader.com. And I'll talk a little bit more about what CME is doing to help people get into ags. But these are just some of the basic ones. There's obviously more than this, but you can see there's just all different tick values. And then you're also going to see different tick movements. It's going to look different to you than it is what you're used to looking at in S&P and NASDAQ and Russell. And so just wanted to go over that real quick. And then I want to go to really just taking a look at the charts. This is where technical analysis on commodities started. I mean, you could go back to like guys with Larry Williams. I'd love to hear him. He's been doing this longer than I've been alive. You know, guys like him, their technical analysis really all started with commodities. And I think that a lot of those basic techniques can come into play today. You know, I like to use the Bollinger Bands and moving averages and RSI to give me a perspective. I'm actually kind of curious, Tom, maybe you have some insight on this. What are probably the more common ones that people will look at when they're looking at ags, because it is such more of a trend supply and demand market? In your experience, what have you heard from anybody that's charting those products?
So one thing is the MACD, the moving average convergence divergence oscillator. So RSI, Wells Wilder, I don't know if he developed that expressly with the commodities, but I do know the MACD was in the commodities space, meaning agriculture space, I should clarify, with Gerald Appel. So that's, you know, oftentimes when we don't have so much news coming out like we do for the stock index futures, it seems like every day there's a report that could possibly move the index futures a little bit. We don't necessarily have that with the agriculture. So technicals do become, you know, somewhat important. You know, you do know that WASD's coming out, so I would say technicals might take a back seat today. But generally, when we have markets where we don't get a lot of news that we know about, technicals rule the day. And I think MACD is one of those that was developed in the agricultural space. And you know, that 12.26.9 could have been optimized for corn, could have been optimized for soybeans, whatever it was back in the day, you know, in the 70s when Gerald Appel was using that. That's definitely one that I would think, you know, being built in the agricultural space might resonate a little better in this space, just because those settings were optimized for ags. But it's also, what, 50 years later, so that might not be the case always. Things change. But yeah, that's one indicator that I know was definitely from the ag space. And, you know, Anthony, I started in really doing technical analysis with CQG, working at CQG. And I know the founder, he built his software in the ag space. He was actually a Chicago trader.
I think when you look at these markets, I actually think a couple things I want to say about this. Number one is I think that commodities might even be better for a lot of people to trade than maybe even some of the indexes, just because they don't move as fast. Some of them do, and some of them can move very quickly. But ultimately, you're not going to have the volatility that maybe you have in the NASDAQ. And I think that there's certain times where these markets will trend very well. And when you look at it here, like when I was looking at wheat, it's a much cleaner trending market. And when you look at the technicals, especially on the daily basis, you are going to potentially get some moves that are, I would say, cleaner, but a move to where the market is going to really have true supply and demand. And if you have some sort of idea of what's happening in the macro backdrop and it's coinciding with the technical, you might want to look and consider, you know, trading these types of markets, these ag markets, because once again, the way that I'll approach them is very small and much more on a swing basis. I'm not going out there and day trading them like I am the S&P and NASDAQ. I don't think they're comparable in that exact same manner. But for some people, there might be times where you have an idea, and this is a great place to come and execute it through the commodities, because I think that when you have any sort of commodity that actually is truly tied to fundamentals, right? We could argue that maybe with crude, maybe some other ones that are big commodities. These are less so conflicted in a fundamental backdrop than those markets. And so when they are coinciding with technicals, they can trend for a good period of time, a long period of time, and they can be very clean trends. I know that cocoa is another one that people are talking about lately, even coffee. Some of those may not be CME products, but understand, I know a lot of people are talking about these commodities. You know, look at live cattle, I wanted to put this up, actually this might be feeder. But nonetheless, this is where you come to see the price action of them. And when they get into these trends, I think when you have these macro backdrops, they can be very clean moves. That something you may want to consider, that if you're out there looking for other products to trade, I think that these products could be pretty interesting.
Well, and you mentioned, the alignment of fundamentals or supply and demand versus, with the technicals. I mean, just looking at this chart right now, I'm looking where your moving average failed to hold a support. I'm not even knowing the news. I'm thinking, well, there was probably some news right there that said supply is outpacing demand, and look how nicely it traded between your Bollinger Band and your moving average, right? Like that to me is a response to some news, but the technicals are a good guide when you have those fundamentals in line.
Exactly. And this is the one where you look at range expansion above a measly 5-day moving average. You could see my consolidation pattern I talk about all the time with the Bollinger Bands, where they come in and they're really bumpy. It actually kind of looks like NASDAQ, which we're going to go to next. And then all of a sudden you have range expansion again, and you might be looking at a potential turnaround at the bottom here. Technicals can be really clean in these markets. Do your fundamental homework. It's extremely important.
So maybe we could switch over to stock index futures. You mentioned the E-mini.
Yeah, Tom. So I'm going to start off with the NASDAQ.
Okay.
Work my way through. I write my free morning post every day. It's on my website, anthonycrudelli.com, on the newsletter tab. I put it on Twitter. It's free. You come out there and read. And I take a lot of time every morning and thinking about the market environment. As I said many times to other traders when they ask me what my strength is, that to me is understanding market environment and really adhering to it, believing in it. And when I look at what's happening with the indexes, you've got PPI, CPI. I feel like Mr. Chow in that movie, The Hangover. Remember, he was like LAPD, and it was pretty funny. It's like it's just all these things are going through your head, and you're just overwhelmed by all this information, right? And when in the social media world, was it bull market, bear market, rate cuts, and all this. And every morning I sit back and I look, and this morning I said, this is the road to nowhere, and the Ozzy Osbourne reference, the road to nowhere leads to me, right? And so a lot of references today, Tom. I don't know. It's where my head is right now. I can't explain why. But when I look at the market, this is just the regular trading hours in NASDAQ going back a month. Okay, going back a month. And this is the regular trading hours, a 60-minute, and you look at the VWAPs and you look and see what type of days we've had. And we've had these moves where it's like rippers lower, ripper higher, consolidation, ripper lower, ripper higher, a lot of back and forth. And you see where we are to a month ago, we're the same place.
Right.
And it's like, it feels like so much has changed. You see the momentum build to the downside. You see the momentum build to the upside. We are in a two-way tape. There is no other way to say it. And we're just in one of these things, in one of these times where the market's consolidating and just digesting this move higher. And corrections can come in multiple forms. They can come in time, where the market just is correcting in the sense of it's just the buyers aren't finding any reason to pay higher prices, but yet when we go down, the sellers lose interest really quickly as well. And I think that's kind of where we're at. And the tape is really representative of that. I mean, when you look at what's happening in S&P, where were we from a month ago? Same place, right? Build up, try to gain momentum higher, can't, ripper lower, can't keep it lower, tries to push down. You look at yesterday, I don't have the CPI and PPI numbers in there. I look at regular trading hours. This is where a majority of us are active. And it just shows you, like yesterday, you look at what happened and it was really a nothing day, right? I mean, from where we opened, obviously CPI impacted the market and there's going to be ramifications beyond it, but overall, not much. And so even I want to go to Russell and then ZN and just kind of give my final thoughts. Russell's a little weaker. Why? Well, the Russell's weaker because ZN is much weaker, which is the 10-year, which we all know, unless you've been living in kind of a boxing yourself in, and you don't know that rates have been going higher. And ultimately, that's going to immediately impact the Russell because the Russell is small caps, and that's really their lending window. So when you see rates go up, it's going to immediately impact small businesses. And so the Russell's weaker on higher rates, which lowers the yen. And, and the final things, I know we're running out of time. I want to say this too. Some people might be really striving in this environment, and this might be a really great environment for you because you may like this type of action. Take advantage of it then. I look at it like this. It's going to be very personal where we are mentally, physically, emotionally in certain moments. And if the strategy is giving you good signals, keep taking them, right? But if it's not, recognize that as well. And the things I'm talking about here are just general ways to give you an idea of what's happening in the context of the market, right? Just understand that why it's potentially a two-way tape or a trender up or a trender down. It really comes down to you looking at your strategy, refining it, and when we talk about develop your edge, it's about you finding that little bit of nuance in what's working for you and exploiting it, right? And I'm not going to come on this show, or anybody's going to come on any show and tell you exactly what that is for you, but you got to find it when it works and take advantage of it. And when it's not, you cannot let the market take advantage of you. That's the most important part of being a successful trader.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.